The ECB held rates unchanged, keeping borrowing costs high while inflation remains above target. Breaking frames the pressure because the decision was expected, but the real tension is how long restrictive policy can stay in place without worsening the slowdown. The deposit rate remains 4%, the main refinancing rate 4.5%, and the marginal lending facility 4.75%. The useful part is the test in front of the story, not a broad market slogan. Inflation and wage data now decide how quickly the bank can change course. That gives the opening a measurable checkpoint and keeps the story tied to named levels, named participants, named rules, or named product steps. The confirmed baseline is the rate hold. The ECB is still targeting 2% inflation, while the supplied evidence describes inflation around 2.5% and core pressure as elevated. The euro stayed stable near $1.08, and markets had largely priced in the hold before the decision. This baseline matters because it gives viewers the part that can be checked before any larger conclusion is drawn. It also limits the story to the facts already visible. The hold gives stability, not a full pivot. The viewer can separate the setup from speculation. One side is the factual baseline, and the other is the result that still needs confirmation. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is restrictive policy staying in place while the central bank waits for more evidence. In plain English, higher rates make borrowing more expensive, which can cool demand and help reduce inflation. For breaking, that mechanism matters because a hold keeps pressure on households and businesses while preserving inflation credibility. The stress point is specific, whether inflation cools fast enough to allow cuts without reviving price pressure. This is the part that makes the headline useful, because it explains why one level, deadline, filing, reserve figure, integration, or data point can change behavior. The direct impact lands on Eurozone borrowers, savers, businesses, and rate-sensitive markets. Mortgages and business loans stay expensive, while savings accounts continue to benefit from elevated rates. Small and medium-sized firms may feel the cost of capital more directly than large balance sheet borrowers. The practical consequence is the rate hold keeps the economy in a waiting period. That is the viewer value here, understanding who faces the change and why the change is not the same for every participant. The effect is not evenly distributed, so the segment focuses on the group with the clearest supported exposure. The unresolved part is when the ECB can start easing without losing control of inflation expectations. A steady decision does not prove a cut is close. That gap matters because wage growth, energy prices, and economic weakness can all shift the next meeting's calculus. The cleaner proof would be cooler inflation and language that prepares the market for lower rates. Until that appears, the story should be read as a defined setup with a real open question. That does not make the story smaller. It makes it cleaner because the unresolved detail is exactly where risk can be misread. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The concrete signal to follow is inflation prints, wage growth, and the next ECB guidance. Those signals will show whether the hold becomes a bridge to cuts or a longer plateau. Breaking becomes easier to read if inflation keeps moving toward 2% and guidance turns softer. It weakens if energy prices or wages keep core pressure elevated. The final readout is simple. The hold is steady, but the exit path is unresolved. A strong next signal should be observable, not emotional. A filing, close, data release, official term, usage number, or liquidity change.